Last week, the energy sector was on fire. Nuclear fuel partnerships, AI-driven electricity demand, and oil mergers making headlines. Together, these stories tell one big truth: energy is on the up. For investors, this isn't just good news. It's a sign of where opportunities are opening across nuclear, utilities, and oil and gas. Let's break it down. First, nuclear power. For decades, the US has relied almost entirely on foreign enrichments for its nuclear power supply. A risky position given rising demand and geopolitical uncertainty. But last week, that changed. Centrus Energy signed a memorandum of understanding with Korea Hydro and Nuclear Power and POSCO International to expand uranium enrichment in Ohio, America's only such facility. But why does this matter? Because it signals that both government and private industry are aligned on rebuilding a domestic nuclear supply chain. Analysts immediately flagged the deal as a credibility boost, with Centrus stock jumping nearly 13% in a single trading day. For investors, this is more than just a stock move. It's about the groundwork for a US nuclear renaissance. With advanced reactors on the horizon, demand for high-assay, low-enriched uranium, or HALEU, is set to explode. Centrus now looks positioned to capture that market, backed by international partnerships and government support. And remember, nuclear isn't just an investment story, it's an energy story. 20% of US electricity already comes from nuclear. Expanding fuel supply means expanding the ability to scale cleaner 24/7 baseload power. In short, this week's nuclear news isn't just a headline. It's a glimpse into the next chapter of America's energy independence. Now, let's talk AI, not in Silicon Valley, but in the energy market. AI data centers are massive energy consumers. In July, US electricity demand hit back-to-back all-time highs, with data centers accounting for a huge share of the surge. Some regions like Texas are seeing electricity demand grow by 10% annually, the fastest pace in decades. So what's happening? Well, utilities once considered boring dividend plays are suddenly in the spotlight. They're planning to spend over $1 trillion in the next 5 years to expand and modernize the grid, and big tech is helping foot the bill. Meta announced it's funding a $100 million solar farm in South Carolina to directly power its new data center. Google also made headlines, agreeing to cut back AI workloads during peak demand hours in deals with utilities in Indiana and Tennessee. These partnerships show how deeply tech and energy are becoming intertwined. For investors, analysts at Jefferies went so far to call this the golden age of utilities. Why? Because utilities are now delivering both steady dividend yields and growth fueled by surging power demand. That's a rare combination. The bottom line, the AI revolution isn't just about chips and software. It's fueling one of the most powerful growth stories utilities have seen in a generation. And that's a sector investors used to overlook. Finally, let's look at oil and gas. While nuclear renewables are gaining momentum, traditional energy isn't standing still. On Monday, Crescent Energy and Vital Energy announced a $3.1 billion all-stock merger to create one of the top 10 independent oil and gas producers in the United States. The combined company will pump about 400,000 barrels of oil equivalent per day, with a focus on the Permian Basin. Markets reacted instantly. Vital stock soared nearly 15% on the news, and Fitch Ratings upgraded Crescent's outlook from stable to positive. The message? Investors see scale and efficiency as a winning formula. This deal reflects a larger trend: consolidation in the shale industry. Smaller producers are teaming up to cut costs, boost free cash flow, and compete with larger players. For investors, it's a sign that oil and gas companies are being disciplined, focusing on balance sheets and shareholder value rather than unchecked growth. In other words, oil and gas remain strong but smarter, and that's keeping investors' confidence high. So here's the big picture. In just 1 week, we saw nuclear partnerships signaling energy security, AI data centers creating a boom for utilities, and oil and gas producers merging into stronger, leaner players. Energy isn't a one-track story anymore. It's diversified, resilient, and full of opportunity. Whether it's advanced nuclear fuel, trillion-dollar grid investments, or disciplined shale consolidation, investors now have multiple entry points into a sector that's clearly on the up. So, comment energy below if you'd like our newsletter. And if you'd like to learn anything more about what we talked about today, check out the article in the description. And be sure to follow TransCoastal for the next energy plot twist.